So this video is for all those new investors that want to build wealth and they know the number one way to do it is in the stock market, but you quite don't understand exactly how a stock market works. So in this video, I'm going to explain to you very simple and very light with exactly how the stock market works and the things you need to know if you want to invest in it. So let's start with the basics. What time does the market even open? Well, it opens at 8:30 a.m. and it's called the opening bell. And the closing bell is going to be at 4 p.m. and this is all Eastern time. Now, if you want to know a little piece of trivia, I'll let you know this. Alexander Hamilton was the one that created the New York Stock Exchange, and it was in 1789. And the first corporate stock that traded on the exchange was the Bank of New York. When it comes to the market, there's two types of markets. There's a primary market and there's a secondary market. Investors like you and I participate in the secondary market. But I feel I wouldn't be doing justice to this video if I don't explain to you what the primary market is. You see, when a company wants to go public and it wants to raise capital, raise money, the first thing it does is it gets with an investment banker who knows the process of how to create stock and how to raise funds for the company. Now, this is the market that you and I do not participate in, and this is how it works. Let's say company A wants to create funds, so the investment banker helps it create the stock. Once it creates the stock, it's gonna set a price, and this is usually called the IPO, which is the initial purchase offer. Now, it sells it to institutions and also to certain individual investors. And the money they get from the sale of the IPO is the only money they are going to get when it comes to stocks. When you and I purchase stocks, company A has no involvement in that. It's only on the initial investment. Now, once the investors and institutional bank has these stocks, what it does is it puts it to the secondary market, whereas you and I can now make these purchases. Now, how can we make a purchase with these stocks? You can use any brokerage account. To keep things simple in this video, I'm going to use Fidelity because as of now, there is no minimum deposit and you can start investing as soon as today. So now you get to enjoy the piece of the pie of this company A. If you want to invest in company A, you could buy the stock. When you want to sell, you sell the stock. And the market has the ability to match you with a buyer and a seller. And yes, I understand. To some people, it's just a piece of paper. Well, you don't even get a paper, but they feel like you're not having true ownership of the company. But you do, because if you have an ownership of the company and it decides to give dividends, it considers you as an owner and you get a piece of the profit. So as you see, this is pretty neat because you could buy a fraction of a company by just buying a stock. And I want to tell you this as well, because a lot of people think investments are risky, and it is. It just depends on your personal behavior. If you want to be extremely risky and don't do your research and purchase stocks from companies that you don't believe in, but someone told you and they promised you it will have large returns, that's usually where people lose in the stock. But overall, if you invest into big, smart companies, let's say the S&P 500, which has a top 100 stocks all within one fund, you're not going to lose. It's going to be very difficult to see Coca-Cola, Microsoft, IBM, all these big companies crash in the same time. And if they do crash, society as you know it would not exist. But since 1802 all the way to 2002, there has been a 6.6% return when you own stocks. So as you see, this is a great way to build wealth. And one thing I want to let you know about the stock market is this. There is no such thing as short-term investing. If you're doing short-term investing, your chance of losing your money is high because in the stock market, it's always going to go up and it's always going to go down. And when it goes down, it can take a few years for it to climb back up. So that's why long-term investment is key if you want to get a great return in the market. Here are some of the benefits as well when you're owning some stock. Number one, it's easy to turn your stock into cash. If you're holding on to a stock and you sell it today before 4 p.m., it can hit your brokerage account possibly today or at least by the next business day. Your money is not so tied up to the market where you cannot redeem it. Now, of course, there's taxes involved, and I don't want to get too deep into this video, but I can have a video in the future if you would like where I could explain the tax complications from when you sell stock. But I just want to give you the basics. You can sell your stock and you get your cash and you're good to go. Another benefit is a lot of these companies offer dividends. So you can get paid quarterly or annually or semi-annually a dividend payment because as I said, when you own a piece of the stock, you own a piece of the company. And if a company is doing great and have large profits and decide to give it to some of the investors, you are entitled to a piece of that money. Now, in the stock market, guys, of course, it's a roller coaster. But as you know, after every roller coaster, it don't matter how fast it's going, how many drops it has in the end, you're safe. The only people who get hurt, and this is a quote from Dave Ramsey, are the people who jump off during the ride. And that's usually when you lose a lot of money, because once it's going down, people get panicked and they fear and they sell their stock. Now, the stock market is not what you see in the movies. It used to be like that, where everyone's shouting and screaming, trying to get a buy and a seller on the floor. Now it's extremely quiet because now everything is going through computers. So due to technology, it's really quiet. It's like a library in there. Now, it's also not the wild, wild west where everyone could run rampant and take your money. There are two entities that are out there that help protect you in your investments. One of them is the FINRA. That stands for Financial Industry Regulatory Authority. They overlook the brokers and the institution and some investors to make sure they are playing by the rules. They have fined so many institutions that were doing some bad behavior or simply just not reporting things accurately, and that caused them to have to pay a hefty fine. So you see, you are being protected in the market. The other one that people always hear about is the SEC, which stands for Security Exchange Commission. They are a tad bit different. They do follow the FINRA quite a bit, but the number one thing they do is they look for the investors. So any investors that are doing any type of nefarious type of activities, they go after them, find them, and possibly can give them jail time. So in this case, you could think of people like Rudy Martinez or anyone that's running a Ponzi scheme. Usually the SEC will find them and punish them harshly. I want to give you all a piece of advice once you start investing into the market. If you start hearing someone talk about all these complicated things, which is probably the reason why you never invested, those are usually the investments that give you no return. You want to stay away from anyone that's talking about any guarantees on any return, because that is not true. It's not accurate. They could be telling you about a certain time frame when they had a high return, but not overall within the portfolio. But as long as you keep things simple, you will be safe. You will make so much money in the market. And this is the number one rule I want to give you guys as well. No one ever loses in the market until you decide to sell. It's always a tendency because the human behavior drives the market tremendously. Once everything is high, people panic and they start to sell because they're thinking things are going to crash. So the whole buy low, sell high is quite different once you're in the market. People usually sell low and they buy high. I really hope this video made you a little bit more comfortable when it comes to investing. I wanted to keep it light, I wanted to keep it basic, and I want to keep it simple. If you have any questions, please drop it down in the comment. If you want me to do another future video explaining something else, I certainly would do that. Catch you guys in the next video. Peace.